Well, yeah, this is the day traders versus the weekly outlook for November the 23rd. It's going to be the week of Thanksgiving, so it's going to be a short week for me and probably for everybody else, but we do have a little stuff going on this week. We had a bounce on Friday that may be our continuation on all of the indices and which was related to a tone shift in the Fed rate release in December, coming up on December. And they went ahead and told us that they're going to actually be giving us the job numbers and the CPI numbers and stuff like that that were related to the ones we missed in October. So they're going to give us our September numbers. Don't know if we'll get our October numbers, but that was the reason for the jump on Friday. And we had some mixed reactions to Nvidia on the earnings. So the earnings actually reported good, but they just had some issues with how we were actually gonna be looking at the AI trades moving forward. So that was the reason behind that. So like everything with Nvidia actually reported good, even though it sold off, and we'll go over that too. So let me turn this down. Okay. All right, so we're going to start off with the news really quick, and let me pull this down here. We had our so going into this week on the 24th, we got no news on US. We got PPI, core retail sales, CPI for Aussie, but not for US. Then we have pending home sales, consumer confidence. So Tuesday should give us probably our best moves will be earlier in the week because we will have no trading on Thursday, and the market may be a little choppy going into Thursday. Typically, it kind of gives us some mixed reactions to most days. And then we got unemployment claims on Wednesday, GDP on Wednesday. And then we have PCE, which is tentative for now, but it'll probably come out with that 8:30 news, even though it doesn't say when exactly, but the GDP, all that usually comes out at 8:30 and the PCE does as well. So you pretty much can expect those to come out at the 8:30 news release. So if you do take a trade on Wednesday, get it earlier in the day, because that's probably when we'll see the most liquidity on that Thursday, on Wednesday. And then Thursday, the market's closed because of Thanksgiving. Friday will probably be a little iffy on Friday. So really try to get your trades in Monday, Tuesday, or Wednesday for the most part if you're going to trade, because as we get later into closer to Thanksgiving, it's probably going to be a little iffy on those trades, right? Um, and then, I will be in the office all week, so I probably won't be able to trade this week. Um, and if I do get in something, it's gonna be quick in and out, nothing that's gonna be held for too long. All right. And as we mentioned before, the Fed rate, we've had a lot of different changes with this, and I'm gonna pull up the post. I kind of been trying to track it a little bit. So initially, uh, couple couple days before this, on the 13th, we had it was like 70-30, where 70% yes, we get a rate cut, 30% no, we get a rate cut. That dropped to 60% that we weren't. It dropped to 50-50 that we would get a rate cut or not. Then we moved to 60-40 where we get a rate cut or not, and that was more leaning to the no side. Then of late, uh, Fed, the New York Fed president, he came out and he actually altered all of that by saying they have enough data to do the rate cut, and that jumped the decision up to a 75% chance that we would get a cut. I think the last time I checked was this 75%. Let's see what it is right now. And that's kind of the biggest thing that we got, the biggest news that we have coming up, probably going into the end of this year. It dropped a little bit. It's about 70-30 again, that 70% chance that we get a rate cut. If we get a rate cut, again, that goes in line with uh, borrowing power, borrowing restrictions, how the tightening of borrowing. So that's where money's supposedly supposed to flow. I think that the shutdown may have done a little damage to the consumer. I think that we won't see as much spending right now, even if they do lower the rates. I think the low end consumer is my personal opinion, and this is just my personal opinion, okay? I think the low end consumer isn't spending as much money in the market right now. I think that they're trying to, a lot of those people who are, were already dealing with financial issues and then got impacted by the shutdowns and stuff. I think that they're not spending as much money. And even people who didn't get affected by the shutdown, I think that they're just seeing like, hey, we don't need to be spending a lot of money this year. Um, we do have some earnings. We got Zoom that's on Monday. Dell, Baba, that Alibaba, that's probably our bigger ones. They're going to be having some momentum in the market. Workday, that's another one. Some more retail. Retail, we got Kohl's, Best Buy, Bloomingdale, Burlington. Sorry, I don't know why I couldn't get that out. Those are probably our biggest ones. Nothing that stand out other than maybe Baba. That's probably the biggest one. I haven't had any option plays, but I just been kind of maintaining with the market dropping, and mostly I'm long on stocks, so on options, so I don't necessarily short them too often yet. But I did have a look at CDE. That was one, a mining company. No changes on that. I'll just update this. Still looking at the same look on this one. Not a lot of change. Want to see how we react inside of this monthly gap right here that we're in, and how we react below these lows that we're responding to now. But no setup on that. Nvidia did sell off a bit. Um, this was the day we reported earnings. We overnight in pre-market we went from the close of 186, around 186 to 196, with a chance to start aiming at this high, but we actually didn't follow through on that. So you have to assume that now we want to go ahead and take out these lows here, come into this previous weekly daily gap right here, and maybe challenge that low we just made again. If we don't, that's okay. But this is kind of where I see us going. And if we don't bounce off of this, we go ahead and push up from there and trade back into this candle right here. I'll if I do decide to take some option plays on this, I will let you guys know. I'm not really gonna be in the markets a lot this week, so uh, I don't have a real strong opinion about it. But I do like the fact that we took out these lows right here on Nvidia, and we are seeing rejection inside of this price gap right here. The price gap at 174 down to 172.64. I do like that. So if you are interested in taking some option plays, this is a good area to kind of consider to buy from. But I don't have any valid contracts right now for a play to give you on NVIDIA. Uh, I just like where it is. So if you want that, I will. If you do decide to take some option play, just know that I do like the area. So if that helps out. The grab play is closed. Jumia is closed. And Neo is still active. Neo is still one that we have active. That doesn't expire till next year. It's definitely not doing what I want it to do. So uh, this one may have to go ahead and cut on this one. We took out this low. I didn't want to see us trade below this low. So I will revisit this and give y'all an update. You can see the notes that I left over here. It needs to hold inside of this inverted fair value gap, which is this one that we sitting at that we traded through this week. And if we close below this, we back inside of it pretty much. If we close below this, I'm gonna go ahead and cut that one on that. So just to update the chart, I don't want this move to happen right here. I don't want us down below this. And there is another price gap. I see it over on the to the right, I mean to the left, that there's a really little small one right here with a high of it at open at 524. Yeah, I don't want to see us below this. And that's going to be my cutoff on this. And if I see us trade below this, then I'm done. I'm done with this trade. Not to say I won't get back in it, but I'm just done with it for now. What's up, man?
Corey.
Yep.
So basically saying you're looking for a bullish move on this
I've been
trade
looking
right here.
for it. Yeah.
Okay. So but you are you waiting for it to dip to a certain level? You waiting for it to
No,
get into
I'm
that fair
already
value
in
gap?
this one. I'm
Oh,
already
you
in
already
this
in.
one, but I might be closing this one out as a loss because I don't like the fact it needs to stay above that inverted fair value gap that it's in right now.
Okay, so let me ask you this. Okay, so this book I've been reading, right? So this uh that bullish candle right here on the
The
end,
one
it
that
closed with it closed inside that bearish candle, right?
it's inside of it. Yep.
Okay, so that's one indicator that the market might be moving up, right?
It's a possibility, but usually, in a situation where we've been pushing down
Mm-hmm.
and we have a candle on the inside, that can show that it's lower time frame we consolidating, lower time frame for sure. And
Okay.
higher time frame, it could show, you know, that we're at a decision point, which you can already see that we are, because we are potentially bouncing off of this, right?
Yeah, that's another reason I was looking at that.
Yeah, it is a sign that we could turn. But I would like to see, and if you look on the weekly, that actually is like a little wick right here.
Yeah.
On the
Hmm.
weekly, we do actually look pretty good with us taking this low out right here and holding. This is a fair value gap right here.
Uh-huh.
So that is a good look for us to take this low inside of this fair value gap. But I just want to make sure that we don't trade below this gap right here. And if we trade into this gap, that's okay. But don't trade below this gap and don't close below this fair value, inverted fair value gap.
Oh, if it closed below that, that means it's probably gonna push more to the downside, right?
Probably so. Probably
Okay.
so.
All right.
And I'm okay if it pushes down a little further, but we don't need to be below this 507 to 524 area.
Okay. All right. Cool.
Because once we start getting below that, then that means we probably coming back to tap this yearly price. This the yearly open. This where the yearly price open, roughly around. Let me see what that price is. 442. So I don't want to see this happen. Um, path is closed. Path is closed. That one we closed that one. Um, Nothing on this one. They do report earnings soon, so maybe we'll come back to you on path as we get closer. When they report earnings on the third. Yeah, it's a little too late to get in there. It's a little too late. I would like to have gotten into that a little. I probably should have waited before I closed that, but it's okay. Yeah. Yeah, no real option plays. I'm gonna just sit out on the options this week, probably for the rest of that. Before we go into the charts on this week, I just wanted to go over this one trade I took on the 20th. I think that's the only trade I took. Yeah, that was the only trade. This was a pretty decent setup. I really like this. It didn't actually play out, but it was spot on, right? And I kind of wanted to go over this first before we get on the chart, just because it was a really, really good setup, but it was choppy, right? So this was a trade you could have, and this was the reason why I wanted to go over this one, because this is a trade you could have took on each one of the indices, right? And just it showed up on ES, NQ, and YM. I actually took it on YM and in ES, and it worked out on both of those. But just to kind of give you a little heads up on this one was um we were in we had and I'm gonna just go over let me go over it on this chart. So if you see these lows right here, we had already taken these lows out when we made this run down right here, right? And you can see that on the same thing that we took those lows out. You can see it on YM, which you just saw. You can see that on here, just taking out lows. These lows right here on NQ. And we made a short-term low right here. And we set these lows right here. And then again on ES, we had did the same thing, right? We taken out lows here, and we took out this low we had just made here, and we set lows over here, right? So all three were operating in symmetry. Thank you, Treese, again. Operating in symmetry. And on top of that, you had a new week opening gap on NQ and ES as well. So the expectation is even if we don't get an actual true bounce of to reverse, there should still be an attempt to bounce near this area, right? And even though we went below this area, right, that's okay because we can still see price reject inside of this range somewhere, which is the new week opening gap range, right? So that's kind of where the setup that I'm about to go over came from, right? With the pre-existing understanding that we were near this gap, we had just taken these lows, and we were starting to see rejection, right? Then on the 1 hour, and I'm sorry, on the 4 hour chart, right before the 9 o'clock candle, and I'm gonna just go here, the 9 o'clock opening, 9 a.m. opening, we were already, let me hide the drawings. We were already starting to reject, right? We had already started putting wicks on the bottom, right? This is the 2 a.m. candle. This is our London candle. So we'd already start seeing that. On the 4 hour, we were starting to reject, and the 6 a.m. candle was starting to reject also. And then this is on the 4 hour. Now, on the 15-minute, there were a couple things you could notice as well. On the 15-minute, this is an order block that took out this low right here. Took out this low. This is our order block right here. And then inside of that order block, there's a fair value gap that was right here. And if we were going to sell off, it should have happened around here, right? If we were going to sell off. But instead of us selling off, we inverted it, traded up above it, came back into it, and pushed up. And then when we pushed up, what did we do? We overlapped it, right? We created a bullish fair value gap right here. And then you can also see that now we got overlap. Our prime area that we probably should be looking for price to return to is sitting around here somewhere, right? So if we press if we let the price play out a little bit, so if we're looking at it, we should get a trade somewhere around here inside of this range, and then roughly around this area, because that's where our order block, I mean our fair value gap, high, middle, and the low are right here, right? So we should begin to trade with our stop loss below the low or below the low of the fair value gap that formed to the upside, right? That trade should look something a little like this. Like this or like this, right? And you can tighten it up as you get further along the way, right? You can tighten up your trade, right? Now, if we go ahead and go forward with this, let me clear off the drawings. Okay. We tag it right here. We end the trade. We tag it. We actually get tagged in on this candle right here the first time, right? On this candle right here, the 10-15 candle. That 10-15 candle actually was like a spot on entry because it wicked it and ran. And it ran really 36 points before it traded back down, right? So even if you just got in right here, that's 36 points. You know, that's a great move to catch on ES with really no drawdown right here, right? But then it came back, it brought you lower into this inverted fair value gap right here and inside of the fair value gap. And you can see it bounced primarily right near the middle of the bullish fair value gap, which was 65.51.75. I actually got the fair value gap off of the 5-minute, so you can see it a little better on the 5-minute. And on the 5-minute, that overlap was here around the midway point of the fair value gap at 65.51.75. It even came down to the low, bounced right off of the low of the fair value gap at 65.39.50 and the low of the inverted fair value gap, which is this blue box at 65.40.25, and just ran up, right? Now, for me, I didn't stay in this whole trade. I got some of it here on this first bounce, and then I came back in near the low on the second bounce, right? But it was just a little choppy on the lower time frame. But you can see this actually ran and took out our high, which is our main target, and then the next target would have been this high right here, and it took out both of those. This same play was the same play that played out on NQ and ES. I mean NQ and on Dow. And you can see eventually we took out these two high, this high, and the high that was over here. We made a new high, and we made an even higher high over here. So on YM, same look, oops, same look, right? Fair value gap that should have sold. We traded through it, traded above it, made a new high. This order block got traded through. Look for price to hold inside. We create a bullish fair value gap through the inverted fair value gap. The overlap is right around the middle of the bullish fair value gap, where we got the high of the inverted fair value gap at 45,961, the low of it at 45,920. Price holds here for the first time. That pulls you in. I got two entries. I got an entry here, and then I got another entry here. I only took it to about here, that 410 area, but that's still on the first trade. That is around 148 points. This second trade was around 233 points. Still a good day. But first target would have been this high. We took that high out on this move. And then there's another high over here. That would have been the second target. And then you would have hit that as well. The only reason why I just didn't stay in the trade. I had some stuff going on that day. And then it was a lot of chop on the lower time frame. This trade took probably like, you know, 2.5 hours, where the 9:30 entry all the way until 11:20. So this is almost took 2.5 2 hours almost. So, and it was just 2 hours of back and forth, chop, 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 push up higher, drop back down the entry, push up higher, drop back down the entry. And I just didn't want to play that game. It's Friday. There was It was Friday, and that's really the only trade that I was able to get in that week. Already made some money on that trade, and I think I was telling a couple of people about this as well. So, this is a great, great setup to review. I'm gonna send y'all this chart, um, and you can compare the move to. I'm gonna send you this chart, and I want you to compare this move and study this move. Um, and the context behind it all, right? This is on Dow. Study the context behind it. Um, and if you got questions, just kind of, shoot them to me if you got any questions. Again, the context of it is we had already swept lows into a bullish point of interest. And once we swept the lows, we were showing signs that we would probably respect the new week opening gap. Once we saw price respecting that gap, we start to see lows get put in on the 4 hour. And then once we start seeing lows getting put in on the 4 hour, we started to see price on the lower time frame, 5 minute, 15 minute, starting to respect that. And then we can see we got our inverted fair value gap, got an order block. We traded through it, the fair value gap that we were supposed to sell from, and we inverted it. And then we had a bullish fair value gap to the upside to confirm a potential move to the upside. And then finally, we had symmetry between all of the pairs to add an additional confirmation that all three were doing the same thing. The reason why I took YM first over the rest because at the time, each one of them had taken out this high. We had this high made on each one, and Dow was coming into the area first. It took YM and ES a little longer to come into the move. So I took this trade later than I took the Dow trade. The Dow trade came first, the ES trade came later. And I actually got pulled in ES and didn't even realize it because I put a pending order on this trade and I forgot about it. And it pulled me in. I saw I was up. I saw we were rejecting this high right here, and I went ahead and took profit and put it at break even. And then eventually it came down and took me out at break even. So compare and study these setups. I'm gonna send y'all all of these too. This is a great setup. It's one that's you see a lot. It's one that's easy to spot. And it's also one that has a very, very high risk reward ratio where you can risk very, very little to make a whole lot. Because a lot of times, what you want to see, like in this particular case, the move just chopped around on the lower time frame on each one of those right here, all throughout this area right here, on each one of them, right? And a lot of times you don't want to see that, right? So that's kind of why I cut it earlier, right? Instead and just took my money. But usually you want to see us come into this area and immediately go ahead and start to take out this high and the highs that were over here to the left on each one of them, right? Normally you don't have that staggering price playing around. Usually this is a very sensitive area and you'll usually see price just immediately move off of that area. But this case it didn't. If you had the time to sit and wait, this would have been one that you would have made a lot on this one. So, all right. So now let's go to the charts. We'll start with dollar. Dollar pushed up on the week. We pushed up off of these lows. We had a fair value gap on the 4 hour right here. Last week we left the equal lows and we just kind of immediately started to push up and trade through these highs that we had over here. These highs are liquidity. They got swept all over here. This liquidity over here got taken out. This gap that I thought we would come to got taken out over here when we traded into here. And then we took out this one previous week high. So right now on dollar, you kind of got to go with a bullish for now, bullish bias for now. But just understand we got these lows that are right here inside of this inverted fair value gap and this 4 hour fair value gap. What I'm gonna be looking for the main move is a bounce off of the inverted fair value gap slash 4 hour fair value gap that's right here. And that'll be in between the 0 to 1 move right here. 0 to 1 move. We can have a bounce anywhere around 99.949 down to 99.792. Primarily, those will be the bounces that I'll be looking for. So I'm expecting us to at least try to take out these highs. I mean these lows right here. Try to take out these lows and sweep them and then push up off of that. That's kind of the first thing that I would see, especially on this 0 to 1 move right from here to here. And if we don't, which that's okay, we still, because we kind of finished stronger later in the week, we could get a buy above these highs right here and go ahead and immediately open up and start to buy. The 0 to 1 move, where we started here on the open, 0 to 1, we could definitely see this previous week high get taken out and even this one. So these two highs are initially on the target list if we move up. And then we got a daily order block that we could be coming into on dollar that I kind of think that's where we're trying to go to now. If we do start to sell off, right, we get this 0 to 1 move to the downside and we trade and we aren't able to bounce here or here, then we should have a fair value gap to the downside that trades through all of this. Um, and then we should get our start of the 2 to 3 move to the downside based off of that. Um, if we get a new fair value gap to the downside, I got to give Tree some kudos again on our last session and on I think it was Thursday. She was definitely recognizing that sell off on Nvidia, which basically gave us the exact thing I'm talking about right now, where we were making highs, we had a fair value gap that we should have probably been buying from, but Nvidia caused the market to trade through the fair value gap. We didn't get our buy from inside of that, and we had a new fair value gap to the downside that kind of pushed all of that out of the way. And let me hop over real quick to let's go to ES so you can see what that looked like. I'm gonna hide these drawings. I'm bouncing over to ES just real quick, just so I can show you, right? So if we do a replay before this candle was made, right? We had taken out these highs with this high, with these moves up right here. We had taken out these highs. There was a fair value gap to the downside right here that got inverted when we made this candle right here. This candle and this candle and this candle made the new fair value gap to the upside, right? We traded into this, held around the middle of this fair value gap, and we pushed up, took out highs here, traded into this area right here, near these highs right here. So if we're going to be bearish, right, or if we start to see a bearish move, we understand that the only way we really, really turn bearish is if this fair value gap was to get inverted. If we invert that, there should be another fair value gap to the downside that replaces this area, and we should see selling from there, right? Fast forward it, right? What happens on this candle? We trade through this fair value gap, we put a new one in, and we continue to go lower from there, right? So now this candle, and this candle make a 4 hour fair value gap to the downside that we now need to kind of pay attention and see how we trade through that, right? And when you have this, you know price should be coming back into this fair value gap right here, which it did on this move up. And now we need to decide that whether or not that this fair value gap is going to sell off again, or are we going to trade through it and use it to take us higher? That's kind of how we want to look at the market now. So I'm gonna go back to dollar, and we're going to need to see something similar to that where we're trading near these highs. If it's going to sell off for real, to make the 0 to 1 and then 1 to 2 retracement, to get the 2 to 3 sell off, we need to see this become a fair value gap. So let me give you dollar. Does this make sense?
Yeah, it makes sense. So the question would be, uh, we just wait for the market to open on Monday to see how the candle breaks, right? How the
Pretty
opening
much.
candle breaks for that time frame to see whether or not it's going to if it open above Friday's candle, then that's more likely that's gonna give us a positive sign that it's gonna push on up, right?
Yeah, probably so. Yeah, if we open up, well, not even Monday, today at 6, but
Oh yeah.
yeah, if we start to push up, that starts to define this bullish move to the upside, and we should get this 0 to 1 move right here. 0 to 1. That's our closest high, right? Right. This is our previous week high. So this is our first target to the upside. If we start to sell off, these lows right here are our first target to the downside, right? That's the start of this sell off 0 to 1 move. You see what I'm saying?
Yeah. But that's when the opening candle breaks below or starts below the market open, right?
Yeah, yeah.
Okay.
We'll get an idea of what we need to do once the market opens.
Yeah.
If we need to take the bullish move, then we need to look at this 0 to 1 trade. If we miss the 0 to 1 trade, then we need to be looking at the 1 to 2 to see if that 1 to 2 holds, and then we can take the 2 to 3 buy to the upside.
So patience is the main thing.
That's the main thing.
Okay.
If we bullish, we need to be taking the 0 to 1, the 2 to 3, or the 4 to 5. If
Okay.
we bearish, we need to be taking 0 to 1, 2 to 3, or 4 to 5. And if we take the 0 to 1 and we bearish initially, but we start seeing price hold around here, we can modify our decision and start to look for the longs at this area and at this area. That's the only way we kind of alter our behavior, you know. You will have a 1 to 2 trade on the buy, just like you'll have a 1 to 2 if we sell, right? You can take these, but these are lower probability. These are against what the current trend is, right? And unless you see that, hey, we are starting a new move, we just had a market structure shift, and we need to be looking for the sales, that's when you would take a sale from the two to the 1 to 2 or the 3 to 4 move. Just like if you start seeing us reject, you can take a buy at the 1 to 2 down here and or 3 to 4 down here somewhere. All right, let's go to gold. So if we get the dollar moved to the upside, like we kind of thinking, right? That should give us the 0 to 1 to the downside on gold. That should give us the 0 to 1. And then we start to look at taking out this low to the downside. And we just kind of ranging on gold right now. I think we building up for a bigger move, right? So I'm not really saying that we're ready to take out this low or not. If we do push up on dollar, because we just kind of been ranging. And dollar been pushing up way harder than what gold has displayed. So for dollar to push up as high as it has and gold kind of stay in this range, it's a high probability chance that we just kind of stay in this range, right? So let me add this. So if we do see, some price moving up on gold, this kind of what it should look like. If we see prices open up, we should see this liquidity above these old highs right here get taken out, and then this high for the previous day taken out. But that runs us into a 4 hour fair value gap, and then even higher, we have a daily fair value gap, which is the one that if we are pushing up, that's the one we need to watch out for. If we start to push lower, there's a small little fair value gap right here. And I won't even say small, but there's a fair value gap here. There's some that we traded through already. And then this bigger range, we're actually sideways inside of a daily fair value gap. So, and we only pierced it right here. So we still could be bouncing up off of this area, which let me extend out a bit. This area where we got a daily fair value gap with the high of the daily fair value gap at 4103.3. The middle is 40.69.6, and then the low is 4035.38. So we need to watch price inside of this daily fair value gap. 4113, 4103.3 is the high again. The middle is 4069.6, and the low is 4035.8. And that'll kind of how we handle this daily fair value gap that's here is kind of going to determine how we move. If we're still going to accumulate inside of this area, or are we going to go ahead and pop out of there, you know? If we sell off, if we do sell off and we trade outside of this range, we end up taking the low from last week. We take this low. Our 0 to 1 either takes all these lows, or we hold inside this little small fair value gap, and then we get a 1 to 2 inside of this to trade off of this daily fair value gap. And then we go ahead and take these lows, and then there's another daily fair value gap that's below us that we would trade into. So that's kind of how I'm looking at it on going into next week. So let me send you guys this gold chart. And that definitely would line up with dollar pushing up higher. If dollar starts to sell off again, then we can start looking for those buys up into that daily bearish fair value gap. But that'll be if we see that move kind of play out, right? Does that make sense? That makes sense. Y'all tracking?
Hey, give a quick rundown one more time.
Yeah, no problem. So again, since dollar been pushing up, we're gonna assume that gold continues to go opposite and sells off. So the first thing I'm gonna be looking for is this 0 to 1 down here below these lows. And if the 0 to 1 goes below these lows, then we should begin to set up to the downside to trade into take out this previous week low, this previous day low, and then down into this daily fair value gap. If dollar does sell off, then we could see price. We still could see the 0 to 1 trade down because we're inside of this daily fair value gap. But we should get a bounce inside of this daily fair value gap, and we start to see that we take out these previous day highs, liquidity above these highs, get a 0 to 1 here, and take out this previous day high, and then trade into this 4 hour fair value gap to the downside, bearish fair value gap, and possibly into this bearish daily fair value gap to the downside. Capiche? You got it? I hope so. I'll take silence as a yes. Okay. This is Dow. Again, these are the lows we took out. That's the low we set last week. This is us rejecting and holding on inside it. This is that fair value gap that I talked about that took out the other fair value gap. Now this is inverted. This isn't inverted. I'm sorry. This hasn't quite inverted yet, but we are in between it. So this area is still bearish right here. But we do have the early stages of what could invert this, right? We do have a fair value gap. It's not through it, but it is taking up a large portion of it, right? Let me just put the fair value gap on there. I just don't want to extend it out yet. It's on the 4 hour and the 1 hour. You can see it right here. 4 hour and 1 hour overlap. I'll just draw it on 4 hour. And then let's look at the daily chart real quick just to get a quick idea. So on the daily, you can see we traded into this daily fair value gap, made a wick, sold off. Now we traded above the body and we starting to kind of push up. We kind of held this little area right here, these lows over here, and we starting to come up off of that. So the question now is, with us pushing up, we kind of traded inside of this candle right here, and we've pretty much like already tried to come after the highs. So the question is, do we want these lows or do we want this high right here? The way we've been trading, they've been dip buying a lot, so you kind of got to go after probably to see if we're gonna catch this high first, and then if we do push up, that's kind of where we'll be looking to target, where we get the 0 to 1 above 0 to 1 and 2 to 3 above that high, right? If we sell off, same thing, this bullish fair value gap that we were using, it gets inverted. And then we start to take out this low from last week and these lows that we left from last week. And you can see if we do that, let me get rid of him. If we do that, we do take out this. We trade down into this daily fair value gap right here. And that should give us our first couple signs of whether or not we want to go even, want to bounce again. We start to push down off of this move up that we just had. If we take out this fair value gap that we just created on the 4 hour and we trade below it, we can start looking for a 0 to 1 move to the downside and then this 1 to 2 retracement to take the 2 to 3 sell. But that will require us to show that we are not respecting this 4 hour fair value gap to the upside, the bullish one. We are still inside of this bearish one right here, which we are kind of selling off, like trying to sell off from the middle right now. That's where we're seeing these down candles near the middle. But if we see price trade above this candle right here, the 1400 candle or 2 o'clock candle on Friday, that could mean this area is an order block right here. And then we could see this 1 to 2 turn into a retracement on this 1 to 2 turn into the retracement back into this candle, and then we can get the 2 to 3 above the highs. Right? Still could possibly be buying in here. Could be selling off a bit to buy in here. And we could also be pushing up to sell off at or near this weekly 4 hour fair value gap and the previous day high, or really near this liquidity sweep as well. we could also see some selling around here. So you make this extend this out a little bit. This will kind of be what I'm looking for ES and NQ as well. So let me write it up. So we are inside uh inside a 4 hour bearish fair value gap at 46,742 high. The middle is 46,477. And the low is 46,211. We have overlap. We have overlap. There's a 4 hour bullish fair value gap. And that high is 46,428. The middle is 46,292. And the low is 46,157. That's this area right here and this area right here. There's your overlap. And now we need to watch out to see if we do get this bullish move to the upside. If we get the bullish move, 0 to 1, the last two down candles will form and it will form a bullish order block. And we should get the continuation to the upside. If we get the 0 to 1 move to the downside, if we sell off, the 0 to 1 to the downside, 0 to 1 bearish move should invert the bullish fair value gap. Okay. And we should be able to take the 2 to 3 from here or the 4 to 5 from there. Does this make sense? I'll take this.
Make plenty of sense, cuz.
Okay. Do y'all understand what I'm talking about? The 0 to 1 and 4 to 5 and all that stuff. Is that making it a little easier, or is that kind of making it more complex?
Man, that make it a lot easier.
Okay. Okay. All right. Now we'll go to NQ. NQ. Let's go to the daily chart first. All right. So we just took this low right here. We trading down into this range over here. So this is the range we trading into over here. One thing I already noticed, see this area right here? What is that? And I'm asking for an answer. Anybody know what this area is right here?
A fair value gap.
And this fair value gap got inverted. So this is a very high probability area, right? This area right here. This whole little area that I'm drawing out right here. And this is a order block. This whole little down candle right here, that's an order block to the downside. So starting from right here, all the way down to here, this area is really, really sensitive. With this particular area right here being the most sensitive, right? Of all of the area, right? Now, what I tell y'all, I like to see lows right before these areas and then sweep the lows, come down into it, and then try to move up from there. So this is a possibility that we could get after, now that we swept these lows, we could start to see a bounce from here, right? Again, they've been dip buying this whole year, right? So that's kind of what we looking to see if they want to do. If not, that same area that we just talked about over here, this same area we just talked about, if we can't bounce off of this, it becomes the main area we try to sell off from. And then we look to take out these lows. And then this area is the next area right here. Right? That makes sense already, right? Already making sense, right? So now we need to see if we gonna take this high out or take this low out, or we start to aim for these highs, right? Those will be the main questions that we have, right? Those are the main questions. And the way that the market opens and moves throughout the week will answer those questions for us, right? So let's go to the 4 hour. There's that inverted fair value gap. It's been off. It's been on the chart for a while, but we haven't needed it. So now let's bring this back into focus because now we need it. That's that same one we just talked about, right? Now we need this dude. Okay. All right. Just like we had before on YM, right? We got our price gap right here. We traded through it. We can use this again. I just don't want to use this on the chart now, so I'm gonna just pull this off to the side a little bit. I still want to know that this is there. Um, Although I won't be technically using it. Same thing, this weekly fair value gap. I still want to know is there. No. Let's bring him out. Let's just bring him out. He's important because that's a weekly. Let's just extend him out a bit. We took out this low. We took out these equal lows right here. We traded through this fair value gap. I'm gonna get rid of him. Right? This is the one we were supposed to use up here. We didn't. It got inverted. Now, what we're working with over here is we have this fair value gap right here. I like it on the 4 hour better. Where the high is here. 4202, 402. Flat. All right. And then this is a bearish. All right, so this is the low from last week. And the low from last week is right inside of that fair value gap that we talked about already. We do have this inverted. I mean, this fair value gap on the weekly. It's we traded through it, but we still holding it back above it right now. We have this fair value gap to the upside. This one will be like a short-term temporary move that we might be able to do something with. So we'll get our first setup off of that area right there. And if we don't respect it, we get our move to the downside after we trade below that area. Our 0 to 1, we're going to try to challenge these lows. And then our 2 to 3 should take us out below these lows and into this fair value, this inverted fair value gap. Then the 3 to 4 should retrace into one of those areas. And then if we are going to stay bearish, the 4 to 5 should sell us off below those lows that we just made. If we get to the 0 to 1, we still could see a bounce from there on the 1 to 2. The 1 to 2 could take us and push us higher, just like the 3 to 4 could as well, because that is a weekly, that is coming off the higher time frame, this inverted fair value gap. So we could see bounces here. So if we do get into those areas, make sure that we seeing the follow through we want to see, because we could get some bounces. From the other sell area is if we do get up into this fair value gap that we left on the 4 hour, we could also see selling around the middle or the high. Middle or high. That'll all depend on how bullish we are and if we get a response to these areas, right? Middle or high are the main two areas. So as far as sales goes, those will be the areas that I will look for sales from. And that will only come if I'm seeing price react to that. And I got a catalyst that lines up with that. So those are my 3 sell areas. And then I've already gone over 2 of the bullish ideas. If we are going to be bullish on the open, these 2 candles become order blocks. If we trade above this high, you can see us holding inside of this fair value gap on the 4 hour and then starting to target these areas up here to push higher. Right? Where this high we made on Friday is our first swing high, our previous day high. This is the closest target that we got, right? This is the closest one. So since it's the closest, you kind of want to see us trade through that first, right? We got a swing low right here. That's another one. If we're going to stay to the downside, that's one you would want to see us respond to first over here as well. How we react to this little liquidity area right here is what you would want to see us respond to. And that'll kind of set us up for this move to the downside. This will set us up to the move to the upside. And if we do 0 to 1 on a bullish move up here, let's come out of this replay mode, right? If we do take this bullish move to the upside, our 0 to 1 should take us above this high. And then either the 0 to 1 go ahead and take us to the middle, or we get a retracement and on the 1 to 2 move to the upside, and the 2 to 3 takes us up above the fair value gap middle. And then we possibly see the move up to the high of the fair value gap on the 3 to 4 retracement and the 4 to 5 move up. So the main thing on NQ on NAS is if we are bullish, we want to see price trade above the last 2 down candles. And those become order blocks, become an order block, bullish order block in particular. That's these 2 candles right here. And then this will be our 0 to 1 move up above the previous day high into the 4-hour fair value gap, higher into the 4-hour fair value gap, the 4-hour bearish fair value gap. And the levels on that is 25,047 is the high of the bearish fair value gap. The middle of the fair value gap is 24,724.75 is the middle. And the low is 24,402.00 on the low. Our other bullish area is if we sell off some, but we hold the small 1-hour fair value gap. The high on that is 24,310.50. The middle is 24,269.75. And the low is 24,229.00. Or we hold this weekly fair value gap that's also bullish. And those kind of overlap, the 1-hour and the weekly overlap. The high is 24,244.00. The middle is 24,190.25. And the low is 24,136.50 on the weekly fair value gap. We can see a bounce near that area, and worst case scenario, we bounce at the we could possibly get a bounce after we take out the lows. Get a bounce after taking the lows inside of the daily inverted fair value gap. I'm not going to go through the numbers on that. You can see it on that on the chart. As far as the sale goes, if we're bearish, Our 0 to 1 trades through the 1 hour fair value gap and inverts it, and the weekly that we already are sitting in right now. And we get our 0 to 1 here. We have our retracement on the 1 to 2 into those areas, and then we get our 2 to 3 move to take us through those lows. Previous week low and into the daily inverted fair value gap. On the 2 to 3 or the 4 to 5 move down. The other area is near the 4 hour bearish fair value gap middle. You got the numbers from before, or near the 4 hour fair value, or the high, in the middle or the high. You got the numbers for that one already, so I'm not going to go through them all, but you got those numbers on that one already. And that should make sense to you guys. I hope it does. Okay. All right. And now our last pair that I got is ES. Again, same situation, right? Same situation. Let's go to the daily. You may not see it from this chart, but there is a gap that's here from this opening to this close. We were trying to see if we would respect. There's also an order block right here. We took the low, we held. And now we're trying to see if we're gonna take out this low here, take out the high, and then start to come after these highs right here, or do we continue through these lows, take out this low we just made, and start to try to target these lows right here into this order block, or this one right here deeper. There is an inverted fair value gap right here that lines up with coming down a little further. So we'll have to kind of monitor that. I'm not going to put it on a chart yet, but just know it is there. And we, like I said, we took those equal lows. There's some liquidity over here. So now let's go to the 4 hour, and you can see we got this 4 hour fair value gap right here already marked up. We are still sitting right inside of this new week opening gap that we did trade below it. But even though we traded below it, we still came back into it. And that was our first dip below it. So we can still use that area. And then there's a smaller new week opening gap, which I think if we need to, we could come down to there as well, right? So let's go 1 hour chart. Our sell-off would be similar to what we just went over in NQ. We got our bullish fair value gap right here. And this is overlapping the new week opening gap. If we do sell off, we need to invert this area from the bullish and sell off from there. We'll get our retracement on the 1 to 2 move, and then the 2 to 3 move should take us below the lows we created on Friday. On Friday here. This is the previous day low, or previous week low for Friday.
Hey, Corey.
Yep.
Yeah, I like how you got the those arrows with the numbers on them. How you put that on
On the chart,
your on the chart?
is here under this little section over here. I'm gonna draw it over here. Hold on. If you're looking at it, it's under this section that's right here. And then when you go to it, if you go down under the Elliott waves, it's
Elliott,
this
okay.
Elliott impulse wave right here.
Elliott impulse wave.
Yeah.
Okay, perfect.
I don't actually necessarily look at Elliott waves. That's a trading pattern style, chart pattern, but it does line up, So, um, I'm not actually looking at Elliott waves. You are, I don't look at the Elliott waves, but I just use that to kind of plot out my moves for the most part. But I mean, it does line up because you always moving in waves, essentially. Um, you know, essentially you are always moving in waves, you know. So, but am I necessarily looking to say like, hey, I want to take you know, we're on the fifth leg or whatnot? I guess you could say I do. I mean, I don't know. I think I guess you would like say that I do look at them, because it's really all we do is we looking at the impulse and retracing, and that does kind of create the Elliott wave. But that's another topic of discussion that we ain't got to go into right now.
Okay. Now, one other question that I have. So, what confuses me? Well, it's a couple of things that confuse me, but we can talk about that later. But
Talk
I'm
about it
trying to
now.
keep up with the market symbols that you are using. Where every time I try to find a a chart, I mean, I know they're pretty much all the same. They're just different brokers, right?
Yeah, but when I'm trading Dow and ES and stuff like that, I'm trading the
Hmm.
futures contracts, right?
Futures
And
contract.
the futures contracts, there's a couple contracts that you need to kind of be concerned with, right?
Okay.
I'll go over. Let me mark this on here real quick. There are there's a continuous contract. There's a continuous the continuous contract shows the continued price for the whole year of the futures, right?
Okay.
There's a 1 and a 2 version of it. And that one shows the continued price. That will be listed. Let me put that on this chart right here. So you can see all of your futures contracts by going under here, and you can see there's your future contract. Your futures contracts are made up of NQ, ES, MNQ, and GC for gold. Those are the main one that I trade. There's a mini contract, and then there's a micro contract. So this is NQ mini. MNQ is the micro contract, right? And that'll look like MNQ, and then you can see the contract options. You got the continuous contract 1, continuous contract 2, and then there are 4 contracts that it switches between throughout the year, right? You got the March contract, June contract, September contract, and the December contract. This is the same thing for ES. It's the same thing for Dow. It's the same thing for gold and the rest of the ones that we trade. It's the same thing. They all have different expirations, right?
So these are like quarterly contracts?
Yep.
Okay.
Mhm. Yep. These expire every quarter based off of the expiration date.
Okay, and when you say expire, what does that mean exactly?
That means that that contract won't, I won't go into heavy detail, but that contract won't be available for you to trade. And the higher the liquidity, the high liquidity will be inside of that contract, the closer throughout that particular quarter.
Oh
So
yeah,
right
okay.
now
So
we're in the December contract right now.
okay. And that's about to close out. It closed out in March, right?
I can tell you the exact date. December contract closes out. Let's go to the daily. The December contract closes out December 19th.
Okay. And does it start a new contract and that'll close out in March,
We'll
right?
go into the March contract then.
Okay.
We'll go into the March contract.
Oh yeah, yeah, we're
And
gonna have to have a deeper discussion about that.
yeah, we'll go into the March contract. And that March contract is what we'll start trading after that December contract expires. And the difference between the mini contract and the micro contract is just how much each contract is worth, right? So right now we're in the December contract. You're either going to be in the MES contract or the ES contract. The ES is the mini contract. The MES is the micro contract. The micro contract is worth less than the mini contract. You can see the value of what it's worth. Go over here. A quick way to see it is if I just go into the buy, right? If I open up the broker. Let's just do this right quick. I go in and I like try to buy or something. Oops. I try to buy, create a new order. I'm in the micro, right? Each tick on the micro is worth $12.50. So every tick. And that's basically every time like so there's 25, 50, 75, then we go to the next point. So every time it moves up one tick, that gets you $12.50 in profit based off of every 10 contracts. Every 10. So every 10 contracts is worth $12.50. If I'm using one contract, it's worth $1.25. So that's I take that back. This is more of how you would want to look at it. So one mini contract is worth $12.50. One
Mm,
micro contract is worth $1.25.
okay.
And right now we in MES. If I take the M off, we go into the mini contract. Let me go back. We go into the mini contract. So now, if I look at this, right, one contract on the mini, you can see the units right here is worth $12.50.
Oh, okay.
So now I can say, like, all right, if I move up one tick, I move up one tick, right? And you can see, like, let me just use this, right? This is, let's say that's my stop loss. This is my take profit, right? This says that my stop loss is 51 ticks. This says my take profit is 101 ticks. So if I do, let me just make it easy. 50. Let's go 100, right? So if I do 50 ticks of risk, that means I'm risking $625. If I do 100 points of risk, that means I'm risking or gaining $1,250
Oh, okay. Yeah, I see it right down at the bottom down there.
right here at the bottom, right?
So that'll be a 41% gain,
Yeah,
and we're losing 20%
pretty
of
much.
your of what you trading with. Okay.
Yeah, pretty much. Point, well, in this case, point four. It'll be a 4% because it ain't looking at the whole thing.
So that's a 2-to-1 right there, right?
Yeah, 2 to 1. Mm-hmm. Mm-hmm. Yep. 2 to 1.
Okay. So that'll make a big difference on how you trade too.
Yeah, exactly. That's what you want to do. But see, a lot of times I like trading the micro because you can put together multiple contracts, right? So same way on the micro is looks like this. That same trade, I go 50 over here. I go 50 over here, 100 over here. Okay. You can see the difference, right?
Mm-hmm.
Where I was looking at a $1,250 trade, I'm looking at $125. Where I was looking at $625, I'm looking at $62.50.
2% and 4%.
Yep. So it's a lot different as far as the risk goes, right? So
Mm-hmm.
I would be risking a lot less on this trade, but if I want to risk the same amount, like right at first, it was one contract on the micro and one contract on the mini. If I want to risk the same amount on the mini
Just buy
and
more contracts.
micro, I would just multiply my numbers by 10 and I get the same thing.
Okay.
So like maybe I don't want to risk $625 on this trade, right? So I'm gonna take the micro instead. Maybe I only want to risk um half of that, right?
Mm-hmm.
So now instead of me taking that, I can break that trade in half. Now I'm only risking almost half of that. And I don't get the same amount of gain, but I don't take the same amount of risk.
So so for in my case, I would look more towards the micro trading while I'm learning.
I mean, I say use a micro at all times. You don't never stop trading the micro to me,
Okay.
because you kind of need to go in between if you really want to be honest. Because one gives you a lot. One sets the size a little differently, and maybe you don't want to go into the minis until you got a larger account size.
Okay.
While you're trading a smaller account or a mid-size account, I say stay in the micros because that gives you more options to break up your risk.
Okay. Make now that gives a lot of clarity.
Right? Makes sense, right? This is the previous week high. Or is it? No, it's not. This is. So let's go back to ES real quick, and we'll finish this up. Our previous week high. There's our previous day high, and then we'll be coming into a daily fair value gap or a bearish fair value gap if we push up over here. Yep, daily right here, daily fair value gap. if we do push up through this, and then we'll need to see how we react over here if we do push up. Okay, so pretty much got this set up right here. Okay, so we have, I'm gonna pull this off to the side for now. Let's go 252, 254. We do have an inverted fair value gap right here. And that's where I want to see price return to for the most part, right? But we also got a bearish fair value gap that we're pretty much sitting in right now. And that bearish fair value gap is from the 4 hour. And we're sitting near the low of that right now, right? And we could see some kind of reaction to the downside from that. So that's kind of where I want to see how we respond to that. If we stay bearish, that's where we should be getting a reaction from, somewhere inside of this area, right? Where we should see price react to the middle or the high, right? So let's go ahead and put that on there. Oops. What's going on?
Corey, when you say inverted fair value gap, what made it make it inverted?
We traded through it, and then after we trade through it, we end up using it in the opposite direction. So, like, mm, like this area right here. This was a bullish area right here. We traded above it, price traded above it, price traded above it. When we came back down to it over here, we should have been using this to buy again. It wasn't able to buy it. And it instead of buying there, it actually traded through it over here. And the next time after we make this low, we trade back into this range over here, which is all of this price action. And then we eventually use that same area to sell off to go lower. So that's what makes this inverted. Once we get down in here and we don't use this and we start to try to buy and we are not able to and it fails, that makes it inverted. And that's why you want to look for those as good setups, because now that it's inverted, it'll use it to sell off, and it should line up with the area that you just used or just created to sell off and continue down to go lower. Right? Just like this little area right here. This area right here, we should have bought from this, but instead it got replaced by this area right here. And let me show you again. This the study chart right here. Okay, I'm gonna come back to this, and then I'll explain that. Let me just get this set up on ES out right quick. But as far as ES go, um, for S&P, we are inside of the 4-hour bearish fair value gap. The numbers on that are 6726.25 as the high. The middle is 6671.25, and the low is 6616.25. And there's also 2 down candles, just like we had on the other one. 2 down candles that if we trade above, they become a bullish order block. And we should get our 0 to 1 move to the upside. And that should take out Friday's high. Previous day high, and trade into the middle of that fair value gap right here. Should take out the previous day high and trade up the high. And then we should be looking to see if we can deal with this inverted fair value gap right here. But that's around where we should get our high on the 0 to 1 move, which should line up with the high on the fair value gap. If we get above that, then we can start looking at taking out these previous day highs here and the previous week high here, and then we go into this daily fair value gap. But for now, I just want to see how we react inside of this fair value gap that we in right now. We also sitting in a 1-hour fair value gap too. The 1-hour fair value gap, and that's a bullish one. The high is 6624.75. The middle is 6607.75. And the low is 6590.75. We could see buying from inside of here. And that also lines up with the new week opening gap from a few weeks before. And we can see buying around that area right here near the low. And then we could also see buying below the previous week low if we sweep that. But if we do see buying below this level and this level, that means that we've already done our 0 to 1, our 1 to 2 to the downside, and our 2 to 3 to the downside, and we should see it after the fact. So our main thing is how we react on the open, which you can already see the market just opened. We already gapped up on the open, right? So we already doing our 0 to 1 right now. So that's already giving us some insight. Now we just need to see how this moves, right? So the sell comes if we sell, we should get our 0 to 1 bearish move to trade below the 1-hour fair value gap, which I gave you the numbers for, and the new week opening gap that we had from before. And then we should use those areas to set up from and get our retracement from the 1 to 2 move to set up the 2 to 3 or the 4 to 5 move to take out the lows, previous week low. And it'll look like this. The other move is if we do trade above the highs, we could see price sell near the high of the 4-hour fair value gap, the middle or the high, the middle or the high. But we need to wait for confirmation on that before we set that one up, because that would be against that lower time frame move if we start to push up to do that. So I would like wait to see if we get a good setup on that, and then let me send y'all this one. Let me send y'all ES. So we got everything. ES, NQ, YM. We got all our options, and then that's that. I'm gonna go over this real quick. So when you see like and this is one of the main setups I trade, right? So, you know, when I'm looking at, there's, some lows and I see that we sweep the lows, I'm trying to see if we get an order block, right? That'll be a series of down candles. This is if I'm bullish, right? If I'm bullish. If I'm bullish on price, I've already determined that we are probably bullish on. I already determined my bias, right? I've already said that, hey, I think we bullish. I think that we're aiming to take out a previous day high or previous day low. I'm sorry, previous day. I think we're aiming to take out the next previous day high. And I think that we're going to trade into something bearish, some bearish point of interest, right? And what I would be looking for is I would be looking for some equal lows or swing low or something like this over here in this type of format or something like that. And then I would be waiting to see like, hey, do we take those out, right? Once I know we took those out, I'm saying, what does these candles look like that are here in this area right here? What do those candles look like? And if those should be like a series of down candles, right? Where all of them should be bearish in this case, right here. These candles should all be bearish. And if they're not, that's okay. But I should get a series or a single down candle, right? And given on the setup, at some point I should see a fair value gap inside of this move to the downside. And that fair value gap, once I make this low and I make this move from here to here, if it's going to sell, it should continue to sell from here, right here. Once it gets back inside of this range right here, this move should continue to sell, and we should get a sell to take out this low right here that we just made. If you don't see that, right, and you see that price doesn't take out this low, and you see that we get price trade back into this range again, right, and you don't, this low right here is a higher low than this low right here, right? If this low, I mean, if this high that we make, right, If we don't sell off to take out this low, and this becomes a higher low, then we need to start looking at the high of this range right here, the fair value gap that should have sold off. Once we start to trade above it, like we did right here, this becomes inverted. It's no longer completely to the downside. It's no longer just bearish at that point. It could go 50-50 at that point, right? The candles that made the order block, we want to come to the opening of those, the highest candle, right? The opening of the highest candle, right? That's going to give us our order block, right? If we trade above the opening, which we did right here, and eventually trade above the high that we did right here, that makes this order block bullish, right? And then we can come inside of the order block and look for the zone that we were supposed to be selling from, which is a bearish fair value gap that's now inverted, right? Because now we traded through it. Now we can start looking for that area to buy from, right? Once we get to that point, we've taken out the high of that fair value gap. We've taken out the high of the order block. We need to look for this move right here from this low right here to the high that we make right here. There should be a bullish fair value gap inside of that. That's what this is right here. Now, once we see that we got the inverted fair value gap right here and the bullish fair value gap that we got right here, there's going to be an overlap where you see price from the bullish fair value gap and the bearish fair value gap that got turned into inverted fair value gap. They should overlap. That's what this is right here, this area right here. That's your most sensitive price point inside of that area, these two overlaps. This is the most sensitive area right here. This particular area is where you can try to set your first trade setup right here. It's very high probability. It's a very high probable setup where you can get your entry inside of this range where you see I got buyers camping out right here inside of this little green box right here. Anywhere inside of here is where you want to, place a pending order or you want to start looking for buys. It could buy honestly from the high, middle, or the low of the fair value gap that we just made to the upside, which you see the low, middle, and the high right here. It can buy from any of those, but the most highly probable area is inside of this area right here because we got overlap between this area that started to buy us up and then this area that's continuing to buy us up. And the reason why is because this area right here represents where institutional buying started putting in their orders to change the direction of price. When they put these orders in, they need to reclaim these orders so they can get this continuation to go higher. So they just put these orders in right here in this area to trick people to think the market is going down. Once they get enough people to think that the market's going down and they start to try to sell, they buy those orders back right here. The ones that they sold right here to trick everybody, they buy those back and then they add on right here to make this go even higher. And this is the same way on the downside, right? It's just the opposite thought process. Oops. It's just the opposite thought process, right? Highs, you see bullish candles. You see an area where we should should have been buying from right here. We see price come into the area. It tries to buy it. It may even take out the high again, high again, high again. But eventually it trades down into this area. It tries to trade one more time. It trades through it. There's a overlap to the downside. This is the most sensitive area to the downside. This move right here creates a fair value gap to the downside. And then we get our overlap here and here. That's where we look to take our trade from. And then we'll look to take out the low that we had just made over here. These are the most sensitive areas, and these are the areas where the institutions use to trick people into think we're buying, and then they just reverse it and sell it off from there. So they've got all their moves in, they got all their orders in, and now we're just making sure that all of the move that we want to put in gets filled. So I'm gonna send y'all this again so y'all can study this, and you can always revert back to this session that we had if you need to hear what I'm saying about it. Because this is basically the main setups that I'm looking for. They look like this, and they come based off of all of this that I'm saying right now. And like once I know and see this, I know I can enter the trade. Like your entry don't really matter so much. Like once you see price responding to certain areas this way, you can get into the trade however you see fit. Like you can use any entry strategy you want. You just need to know that I'm seeing things the right way. I'm seeing things based off of the fact that we just took highs. We should get a sell off. I can enter here. I can enter here. I can enter here. I don't need all this. I just need to know like, hey, this is doing what I'm expecting it to do. And then I'm gonna just take it for what it is. This was the setup from the week before that I went over with y'all on NQ and ES. It was the same setup. I just had to find it on a different time frame. But it was the same setup, just applied based off of levels that were given to me at the time. It's the same thing, and that's how you want to look at it. All right. I hope
All
that
right.
makes sense.
All right. Thank you.
I hope that makes sense,
That
man.
helped a lot.
Okay. Anybody got any other questions?
I don't have a question, but I want to say thanks again because every session I feel like I pick up something new that's going to take my trading game up to the next level.
You've been on it, man.
Me too. I've been listening.
What? What up? What up?
Yeah, she's going to be a trader too.
Okay.
Generational wealth.
Okay. Yeah, you've been on it, man. Like I said, I've been giving you a shout out all this session. You have definitely been on it. I like the fact that you spotted this right here. This right here, when you messaged me, and I was like, yeah, so this what you mean when you say it got replaced? Yes.
Yep.
Exactly it.
Yep.
This is exactly it, bro. That's exactly what that looked like. This was supposed to be buying. We replaced it with a new thing, and we sold off and traded through it. So you already know next week, this week, this area right here is where I'm gonna be looking for. This particular area right here. And even more defining is this. Let me put it on there. This particular area right here is one that I'm going to be paying attention to a lot right here. How we deal with this particular area. Because that's where we got overlap from this one.
Yep, for that fair value gap to the inverted. Yep.
I'm going to be paying attention to that particular area. So that's also why I got the 0 to 1 move on this upside inside of here first. because I want to see how we react to that. So, like even when we get into this area, our 1 to 2 move should happen right around this area somewhere. The 1 to 2 right here. And then once we make this 1 to 2 move, that's gonna kind of define like whether or not this get respected up here on this 2 to 3 move. On the 2 to 3 move, this also why I got this sell off right here. Because if we get in here, we actually can sell off right
Sell
here.
off on it. Yep.
Yeah, we can actually sell off on that. So and that's where this move coming from, right? So I'm kind of giving y'all every scenario that I can think of that we could have. And then it's just up to you to watch the charts to monitor which setup play out and how you want to play it. That's why I do it like this. And then once you get to the charts, once you see you make a if we are gonna sell right here, you should see the same thing I'm talking about on the lower time frames, and then you can get your stop loss, take profit, all that stuff from that lower time frame.
Okay. Yeah.
You know what I'm saying? Yep. Yep.
No, I appreciate it, Corey. I really do, because you've been
Yeah.
very dedicated to getting on these calls with us.
Well, this might be the last one for the week because we won't. That's another thing. We won't have no call on Wednesday.
Wednesday.
We got day before Thanksgiving. So we won't have a Wednesday call. And we'll have the Sunday call for sure. But yeah, we'll have we won't have the Wednesday call, but we'll have the Sunday call. So no Wednesday call. So y'all enjoy Thanksgiving. And happy Thanksgiving. I'll still be messaging in the group. And after we get to these different levels, I'll probably update the group and stuff with what I'm seeing too. So just be looking out for that too. So, on that note, no more questions. So I'm just gonna have to end it with happy Thanksgiving, happy indigenous what is it? Indigenous Peoples Day. And enjoy the time with your family and friends, and don't eat too much. Most of that food ain't good for you anyway, and you're gonna be regretting it because you're gonna be feeling like a pig, feeling all tired and laid out on the couch. But spend time with your family, man, and enjoy. Find something to be thankful for. All right, y'all.
All
All right.
right. Y'all have a good one. And
All right.
happy
Happy
Thanksgiving.
Thanksgiving. Yeah, happy Thanksgiving.